Hey, I'd like to welcome you to another episode of the Mission Matters Money Podcast, your source for all things money. My name is Adam Torres. You can follow me on Instagram at AskAdamTorres to keep up with my book releases, book tour schedule, signings, all that other good stuff. Always love to connect with you there. And as always, if you'd like to apply to become a co-author of one of my upcoming books, just head on over to the website, missionmatters.com, and click on Become an Author to apply. All right, so today I have Dusty Rollins on the line, and he's owner over at Oxford Business Services. Dusty, welcome back to the show.
Thanks, Adam, so much, and I love your show. You're a mover and shaker, so always up to good things. Thank you.
Oh, man, too kind. And for those of you listening, this is our very special reunion 2020 episode. So what is that? That's when I bring on a guest I had on in the past, and I liked him so much, I had to bring him right on back. And Dusty is one of those that were chosen. And just to kick us off, Dusty, I don't want to assume that everybody, all our new listeners, caught the first episode. Let's just go right into what you're doing over at Oxford Business Services, please.
Perfect, Adam. You know, I got into business a while ago, and I've always had my own business. I realized early on that through feedback that I was unemployable. So I kind of was forced into my own business, and I love it. And so at Oxford Business Services, we do two things. We focus on taxes and profit for business owners. And, you know, because we find that so often the business owner is so busy running what they do, doing what they do, that they don't have time to think about the profits and the bookkeeping and the taxes, but that's so vital to really building the wealth that they want. And so that, you know, how I got into it was I was a business owner a while ago. I was running my own construction company, and I just kept getting bad service from the vendors I was using for taxes and profit. And so as I kind of learned it on my own, I decided, hey, here's a big gap, and I'm going to just walk into that with my own business.
Well, I love that. I mean, I love when that's how businesses are started. You had a problem, or you had a need yourself. You solved it for yourself, and by doing that, you're helping a lot of people now. So
Exactly.
Let's talk about the right type of client for your company. So there's a lot of business owners, entrepreneurs, executives listening to this right now. What are the right fits or niches for you?
Well, you know, it's interesting because a while ago I looked at, you know, who are my top 10 clients and who are those, you know, you always say the top 10 clients that you want more of, right? Mm-hmm. And so they're usually business people that have, you know, an ongoing concern, not necessarily startups unless they've got a really good plan. But our real niche is that kind of that mid-level. They're really starting to make some money, and they're starting to burn things and in a good way. And we find we can just come along and with our profit accounting system and with the tax savings, the tax plans, we can really make a giant impact on that kind of business owner.
I think that's also a great transition. I mean, taxes. It's the year. We're in the thick of it right now as we speak. Depending on when you're listening to this, you are too. So what should our business owners be thinking about going into this tax season?
Well, always, Adam, a great question. Always they need to be thinking about a tax plan. And so what we find is because they don't like it. Nobody likes it, right? I picked probably one of the most boring subjects out there, but it's so vital. And what we find is most business owners default it to their CPA, to their accountant, and they're not actively working on what is my plan or hiring a strategist who will help them work on that tax plan. So that's number one. And then number two, there's two interesting little things. One, this year, for the first time on the Schedule 1 form, I don't want to get buried in the weeds, but the IRS, there's a simple little question that's going to catch some people. And the question is, did you do anything with digital currency? And so, you know, we've been hearing in the news that a while back the IRS, you know, went to one of the digital currency exchanges and wanted a list of all of their people who had done 10 million or more. So that was kind of the first foray or the first warning shot. But, you know, a lot of people, probably a lot of your listeners aren't in that $10 million or more category right now. If they are, they've already been dealing with it. But this simple little question on that form has really opened it up to everybody, and that's new for the 2019 tax year. And so what that means is I just implore people, it's a vague question, but don't mess around and say, well, I'm going to check no because I don't think they can find it. That number two is, I never fear the IRS because when you do things properly, there's a lot of defense that you have. You can really represent yourself and you have a lot of opportunity there. But I will say this too is I never underestimate them. And so one of the things that they're starting to do is, just like all of us are using AI, the IRS is starting to use AI to track down people. So again, that doesn't need to scare people. Unless they're not filing, it needs to scare them. But what I'm saying is, so there's some cryptocurrency people out there that think that they've been kind of flying off the radar. Now they're going to have to get on that radar and have to start running things properly. And I was talking to a guy, he's like, well, I haven't filed in a few years. I think I'll just risk it. And I said, you're welcome to do that. But just know the IRS is getting more and more advanced in that AI function of how they track down people.
Wow. That's an exciting space to be in. And you're right. I think you said first shots fired. And then, that box is so interesting. They're collecting the data. That just lets you know. It took some years to get it on the radar officially, but now, wow, that's big time.
And if you answer no to it and you are doing it, that's fraud.
I was just going to say, it's not a joke.
Exactly. And a real quick thing is let's say you take a really crazy deduction, right? And you get audited and they overturn that deduction. Well, if you did everything properly, that's not fraud, right? They may overturn it. You may not win your appeal and you may have to then pay taxes, but fraud is when you actually lie to them or hide an account or hide income. And once you open that wormhole, then that's really not good. So that little question on there is going to slip some people up. And again, I'm not one to fearmonger. There's a lot of rights that you have as a taxpayer. I wrote a book called The Taxpayer Manifesto. You have these rights. I'm just saying when you start off and we muddy the water, that can be a long-term problem for some people.
That's awesome. Well, great tips there. Let's talk a little bit more on the strategy part of things and having a tax strategy. I don't know if everybody understands what that means. What does that mean in your world?
Perfect. So most CPAs, most accountants, at the end of the year, they ask the business owner, send me all your accounting stuff and all your receipts, and we're going to figure out how much you owe. The problem is, you've eliminated a fair number of the strategies that you can't use because it's already past time. You needed to be using them throughout the year. And so what we do with all of our clients, even the profit accounting system, everybody goes through a tax plan where we say, okay, these are the strategies that you can take advantage of on a regular basis, but you can't take them at the end of the year in just a straight up deduction. So one of the ways I tell people, that usually this means you don't have a tax plan. If your CPA at the end of the year says, okay, why don't you go buy a big new truck, a big new SUV, as long as it weighs over 6,000 pounds, you can deduct it all, and if you buy it on December 28th, you can deduct it 100% for the year, blah, blah, blah. That, they're not doing tax planning. They're kind of doing it in arrears, and that's not a tax plan. But we help you get a tax plan set up so that you can use it moving forward. It's kind of the difference, I say, in playing chess versus checkers. So chess, you're making 3 or 4, when your opponent makes a move, you already know 3 or 4 moves ahead what you're going to do, whereas checkers is just a reaction.
Fantastic. So, Dusty, if somebody's listening to this and they want to, let's say, increase their skill level in the game they're playing from checkers to chess, how do they contact Oxford Business Services?
2 ways. One is Dusty Rollins, ROLLINS.com is my main website, DustyRollins.com. And on there, I have a scheduler and my phone number. And, we like to have a lot of conversations with people, kind of like yourself. And from that, it kind of determines who we should work with, who wants to work with us. So we offer a free, no obligation call just to kind of get the ball rolling.
Perfect. Well, hey, Dusty, it's been awesome catching up with you on this Reunion 2020 episode. Thank you for the tips and the insight on some of the changes in what's going on in tax right now. And to the audience, as always, thank you for tuning in. Hope you got a lot of value out of this. If you did, don't forget to sign up for to subscribe to the podcast. And if you're watching this on our YouTube channel, Mission Matters Money, don't forget to subscribe there and leave us some comments in the comment section. Love to know what you thought and what you're working on. And Dusty, thanks again for coming back on the show.